Welcome traders to this week's analysis on gold. Thanks for joining me. My name is Vic. Gold has hit all-time high, and so far what we can see on monthly time frame that it has gone above this structure level, which was around 1923. In the month of July, gold had the highest increment in one single month over past few years actually. So this has been a very good month for gold. However, the market is very overstretched. In the previous month, I was expecting market to actually go down, but obviously that did not happen. Market went really high up, and again, it has come to one of those regions where again it needs a pullback. I am long term bullish on gold, but to sustain its long term movement upwards, it needs to come down a little bit before it starts to move higher. It is very overstretched at the moment. But when can it come down? Right? What is the level we are looking at? So that's what we're going to find out. We'll try to find out in this analysis. Before before we proceed any further, what we can see that market has created this W pattern and which worked out nicely here. Then we were expecting market to respect this W pattern as well, which obviously it did not. However, an extension of that W pattern is available around here, which is 2030 level. So if the market reaches there, then we can expect it to come back down. Currently, just by looking at the monthly candle, this is looking very bearish at the moment because this is one of the biggest candles here. Market has obviously overstretched. So overall, the next month of August, we are expecting a bearish move, but we should not just start taking the short trade right now at the start of the month. You should wait for confirmation. If you're already short, then you should you should manage that position nicely. But we are expecting a bearish month in the month of August. Let's look at the weekly time frame. On weekly time frame, again, this candle is looking overstretched, but it is not looking a bearish candle. It is still a bullish candle, so market can actually for another week or so go higher to complete that pattern. There is another pattern which has actually just completed here, and that's why we saw one single day of bearish momentum. And we'll see on daily time frame, this is where I presented that in one of the posts on here on TradingView, which is right there. So let's bring in that original analysis. This is what we're looking at. So we had this 5-0 pattern, which is kind of like rare pattern, but it does happen. This is 5-0 pattern, and that completes right there at 1957, and that's why the market actually showed a little reaction there. However, remember, we are looking at longer term, right? If one single day of bearish momentum or one single day of bullish momentum is not going to make much difference if you are swing trading. For day traders, yes, it is. It can make a lot of difference if they are going long from this level or going short from this level. However, from swing trading point of view, that single bearish day itself was not of much significance other than showing a little slowness in the market, little weakness in the market. And that weakness can actually tell us that, okay, fine, we are on the right path. If this pattern plays out, then we can expect market to fall all the way down to 1721, that kind of level. However, there can be another push remaining if the market starts to move higher from this level. If the market actually breaks through 1780 level, this level which it has been holding so far, 1780 is right here. If the market breaks through that level, then we expect it to come to 2040, around that level, that particular zone. The reason is because that W pattern that we saw on monthly, that extends to 2030 or 2040 level, around there. So once it has reached there, then we can expect a bearish momentum. So if we go back to the daily time frame, this is what we are going to do. I'm currently personally already short on this, but I will manage my position. I will monitor the market scenario, and if the market actually goes above this, if we have a breakout, then we'll have to look for something like 2040 level. If the market holds it and at the start of the next session it starts to go down and breaks through 1957, that level, then we are looking for bearish move into 1720 level. But remember, this is not going to be straightforward. This is a swing trading point of view, so it may take days, weeks, and months to finish that. It is not going to be straightforward like in one day it will come back down. No, it won't. So if you're swing trading, then this is for you. If you're day trading, then you should go to the lower time frame and see what kind of opportunities you might have. On 4 hour time frame, we can see that it is forming a flag pattern. It has tried once, twice, thrice to break through that 1980 level, and that is why we are saying that if it actually breaks through that, then we are looking for 2030. And otherwise, we are looking at these levels which are highlighted here, 1901 or 1858, and then we are looking for extended level at 1721. So that's what we are looking at in terms of analysis on gold. It is still bullish, so do not look for almost immediately short opportunities. Always wait for a confirmation, and if you want to go long, then this can be your level to watch out for. So hope you enjoyed this analysis. Hope you found this useful. If you did, hit the like button. In the comment section, let me know what you think about this analysis, and do not forget to subscribe to my channel. Thank you.